Hey everyone, this is the video review for November 19th, 2020. Um, Today was a not the greatest a day. I made one trade today, and it was a bad trade. And my strategy of stopping myself from trading after I make even just one bad trade, um, I enacted it, and it was at one point I was like thinking, why don't I just bend the rule and change it and break the rule? Then I realized if I'm willing to break this tiny rule, I'm, it's more likely I'll be willing to break my plan's rules. Whether it's risk management, the entry criteria, the stop placement, everything. So I stuck to it. That was good. But today I did miss one opportunity I noticed in real time that would have been a good trade compared to the actual trade that I did take that I'll go over in just a moment. The news I noticed that we gapped down. We opened at the 35.56.50 level on the ES. I can't remember where we opened on the Dow, but everything was down overnight due to the jobless claim. Well, one of the factors, of course, is the high jobless claims number. It was higher than expected, 70.42, versus a consensus range of 685 and 725. So it was above the high consensus, which is not good. Right, more people being jobless. It's not good. Again, today was not a good day. I definitely hesitated and noticed my lack of a reaction time. I'm going to change that by waking up about 20 minutes early. 15 minutes earlier to really get set up and get ready, because I felt like this morning I was trying to start a car in third gear. I was being very, very slow. And it felt like as soon as the market opened, I wasn't ready for... I wasn't in the right mindset, and I wasn't in the right... I wasn't ready to perceive opportunities. I was still kind of slowed, and I just wasn't ready to trade, really. That's probably why I missed two actual missed trades. I think were before this one missed trade I noticed. Yeah, so that's why I missed two missed trades before this missed trade I'll go over. But I'm gonna wake up earlier so I can have a better better tomorrow. It's Friday, last day of the week. Gonna make it good. Gonna end on a good note, and really focus up and really stick to the plan. That's the goal, right? Anything else I'm missing? Nothing really, just other than my lack of reaction time today, my hesitation I noticed, and the thing I noticed is past 7 a.m. Pacific Standard Time, I'm seeing less and less breaks. The price discovery time period of 6:30. I noticed is really 6:30, 6:35, and then 6:45 slows down a little. 6:50, I noticed around 6:45, 6:55, or 6:45 to 7. I noticed there's always some sort of move. Like at 6:47, we got a break, a really nice break. Yesterday, I believe it was at 6:52. The day before that, it was 6:55, something like that. But I've noticed this, I think, consistently this past week. This weekend, I'm gonna take a look at that and see if there's any like actual merit to the claims I'm making about that 6:45, 7 o'clock time period, and there being a break during that time. But let's get on with the first trade. So the first trade is a missed trade. It's a theoretical trade. Entries and stops are not real, obviously, but let's just watch it through and then I'll go over it. So yeah, that was a missed trade. To me, it was pretty obvious on where I missed it. You know, price was trading off the lows, was rebounding. You see sellers interested here at the 50.75. Watch here. See him interested, but bid holds. Price trades higher. Offer now 51.50. Bid 51.25. Still see some selling at the 51.25. Still interest at even at these prices. But buyers are also interested, so it's got that two-way interest. I'm looking for the one-way interest. So again, still see some selling at bids when it's 51.50, but offers are clearing, so they're not willing to hold levels. We start to see a little bit of slowdown here as price has a little hard time ticking up and it starts ticking down. And then we notice that as we go up to the 52.25s, only 13 trade in there, right? So when 52 goes bid, you'll see here has a hard time going offer, goes offer on a little lack of volume, and every time it goes 52 even goes bid, gets shot back down to offer, and then it starts to hold a little more, and then breaks, and that break right there, right here. So you'll see you got 59 trading in 52 even, 52.25. You got 13 contracts. Every time it reaches that price point, sellers immediately quickly sell into it. Buyers not that interested in that offer. And sellers are now holding the offer a little bit more. Again, quick acting, and then you start to see the shift, right? So right now you're seeing 2-2 trading in the 52 evens, 2-6 in the 51.75s. So right now it's pretty even, but then bid breaks and bid goes offer, and then a once defended 51.50 level back here. You'll see here as sellers had a hard time really keeping that offer, and buyers were willing to buy at the 51.50. Once when we break 51.75, we immediately see 51.50 break. So boom, an order just cleared it, no problem. And now as it clears, 51.50 turns offer, and then there's a slowdown in the buying at the offer now. And then there is little volume going into the bid and breaking the bid. Again, 51 even, not much buying anymore. Bid's kind of stepping out, right? So that's the context of the trade. Going back, and we'll talk about the premise. We'll wait till I reach right around here. It's right around where I had my mouse cursor over it. So I pointed at the 13. I noticed it. Got my cursor above the 52.25 level, getting ready to wait till I see the premise become is what I call 3 layers. So each layer is a price pair that shows a change of direction and interest. All right, so 52.25 or 52 even and 52.25 is the current is the past price pair that we're first looking at, right? Lack of interest at the 52.25 offer, 52 bid. We're seeing sellers have the interest there. So sellers are interested here, buyers are not. Okay, first layer of the premise. Now we're seeing it also hold. The bid's not able to hold at the 52 even, and then you see the change of interest happen at the 51.75. Sellers are now willing to sell into the bid, and the bid breaks. So that is the beginning of the second layer. We are now waiting for the third layer, which begins at the 51.50 and 51.75 price pair. What we're looking for is offer to hold and or buyers to not find interest at the 51.75s anymore. When that happens, we get short. So we either get short at the 51.50, 51.25, or 51 even, depending on how much slippage I get and how fast. So obviously, since immediately got traded into and someone took all the liquidity out of the 51.50 bid, we would get filled at 51.25. Right, so you see 6 only traded at 51.50 when earlier you have this nice amount of volume coming in at 51.50 and offers holding, and then sellers pushing it down, but bids were able to eventually hold on to that price point and then hold on to the 51.75s. So it obviously shows that there's a change of interest, and this is what I'm trading. So the change of interest is now to the short side, get short at the 51.25s, 51 evens, depending on whether or not slippage would have occurred. And that's the premise. For the stop placement, the 52.50s is the correct stop, as it's the invalidation point. You have the 3 layers, the 3 price pairs, the 51.50 bid with the 51.75 offer, and then you have the 75 bid with the 2 even offer, and then you have the 2 bid with the 2.25 offer. So you got three price pairs that all show a change of interest from buyers to sellers, and that's what I'm trading. And the invalidation point is that final point where buyers show the least interest. So the least interest would be the 52.25 level, as only 13 traded in there, right? The least interest of the buy side and the most interest in the sell side, where they're really willing to defend it. And that was here at the 52.25 level. So if this started to get more volume traded into it, all right, let me retrace that. You start from the first layer. So if the first layer breaks, the premise gets weaker. Second layer breaks, premise gets weaker. And you go, once when that third layer breaks, the premise is gone. The premise is no longer valid, and you're out. So that's why it's up at 52.50. If they're willing to take all the, if they're willing to turn 52.25 into bid, I don't want, the premise is gone. There's no more, the trade's not there. The interest came back at these layers, as I call them, in the premise, and the layers are now peeled away. Done. Out of it. Not a trade. That's why the stop is at what I call the invalidation point, where the premise becomes invalid. So during this time, NQ, during the opening minutes of the cash, as I said, I believe before, it wasn't really following the ES. You can see it here. NQ is near its highs, was pushing highs. You have a net delta 289, net delta ES at 1303. Can't see the Dow, but the Dow was also kind of in line with the E-mini S&P. So that's what the NASDAQ was doing. That's what the E-mini Dow was doing. And I already explained the reasoning for the stop. The reasoning for the entry is because that's at that final point. So that's at that final third layer confirmation that we see 51.50 now being interested. If I started to see selling into 51.50, not this big hit bid that took all the liquidity, I would have gotten in at 51.50. But since it took all the liquidity, the best price I could get was 51.25. So that's the reasoning for the trade. That's the reasoning for the entry in that exact entry compared to other prices. Right. So the risk reward was good. I measure if it's good, bad, or a great risk reward depending on the ticks away from the stop versus the ticks away from the first peel, right? So this risk reward would have been okay. Let me make sure I'm looking at the right one. Yeah, so this reward would have been okay had I get filled. So had I gotten filled, if I got filled at 51.50, it would have been a 4-tick stop, and the low is gonna be 6 ticks away. Now, if I were to get at 51 even, that would be or 51.25. Sorry, if I got filled at 51.25, it'd be 5 ticks away. So the minimum, I'm making a mistake. 6 ticks away for 51.50, 5 ticks for 51.25, and then for the first peel, and then for the stop, 51.50 is 4 ticks, and 51.25 is 5 ticks away. So that I would reason as an okay risk reward. If I got filled at 51.25, that's 5 here, 5 down there. Issue is the first peel I plan on peeling between this kind of 3 tick range, or really kind of almost in this 4 tick ish range, just pretty much near the low. If I saw this price action, right? If I saw 221s trade in and 135 trade in the offer and break, maybe would have peeled. If I would have seen this 51 even, or not peeled, I would have flattened, possibly, depending on the price action, of course. But if I saw this and I saw the 51 even hold and hold well, and then the direction of interest change back to the buy side, probably would have flattened. But that's besides the point. I just want to make a point about the risk reward and where I usually peel, which is right around here, unless price action tells me otherwise. So was this trade following my plan? It was. Had I taken it, I did notice it in real time. I made a note of it as soon as I knew I missed it. I had my stop ready to go. I was just hesitating to enter on the at the 51.25s when I could have with no problem. Just hesitation. The strength in this trade really was me noticing it, being able to see these trades during that the open price discovery volatile period of time when there's a lot of volume being occurred, and it's quick and it's fast. And I remember when I first watched this, it was pretty overwhelming, and now being able to see it a little bit clearer and understand what each number means, and what this means, this and that, and being able to read it better. I definitely see that as a strength, because it's a skill I need to work on. I'm always just going to try and improve the skills, but slowly but surely I was able to, I will be able to execute on these trades, though. I do feel confident one day, over time, after seeing enough open price discovery ranges, I will be able to execute without hesitation. So the mistake on this trade is obviously me missing it. I had my cursor at the 52.50 stop point, the invalidation point, ready to go, but missed the trade. That's obviously the mistake of it. How I'm going to fix it is reminding myself before the open that if I do see the clear stop with not a clear stop, a clear premise, the 3 layers, the 3 price pairs that show 3 different events of changing interest, the change of direction of interest at 3 different price pairs, as I call it, 3 layers. The more layers, the better. And if I have a clear stop and a good risk reward price entry, then take it. There's no reason not to take it. Spending 4 or 5 ticks on that premise is definitely worth it. More times than not, from the experience I've been watching and all the missed trades I've had, most of those missed trades come out to be winners. I'm pretty sure that's just a bias in, there could be plenty of good-looking setups, good-looking premises with a clear stop and clear everything that I miss simply because they don't come out as winners. So I'm pretty sure that happens too, and I wanted to make note of that. But from the missed trades I noticed in real time happening, it seems like there's a higher probability of the break occurring, based on what I view as a premise and how I contextualize it. So I'll never know if it's a winner or loser, and all I can do is just trade them every time I see them, and over a group of trades, and over a larger period of time, the edge will be apparent, and I'll be able to know, maybe a 82. No, I don't want to say 82. Maybe like this is a 40% win rate setup, but I never know if the next trade's going to be a loser, and the next one a loser, and the next one a loser. I don't know that for sure. So the hesitation really was me worrying about the immediate outcome, which is bad. That's something I'm working on. But last thing, it was a win or lose. It was a winner. It became a winner. I'll watch it to the end. Yeah, became a nice winner. Next trade, we'll go to the actual trade of the day. Let's see here. Trade number 1. Okay, so we'll watch this through and then I'll go over it. All right. So that was the trade. That's the one trade of the day. I'm just going to start. It's just say it plain and simple. It was a chase trade. And actually, I thought this was later in the day. I didn't realize it was at 6:34. I didn't realize I stop that early on. But this was a chase trade because if you see a trade earlier, right, we're at 35.46s, and that missed trade was happening at the 35 ones, right? So the missed trade I was just talking about, just, we're at the 35.50s. Now we're at the 35.46s, right? Those are all the way up here. And you can see it. Price doesn't return there. You still have that old sitting 52 even, 52.25 last traded there. So this was definitely a chase trade. It was me constantly trying to stalk price action, just waiting till I see any sort of disinterest at prices because I wanted to get in. I didn't want to miss another move down. You can see here, I mean, I have my mouse hovered over this lack of interest point at the 47 evens, right? And I have it ready to go as a stop. And, that's the trade. So I'm noticing here, right off the bat, price clears the offer quite quickly. You start off by having this kind of refreshing period in the 45.50s, 45.75s, and the 46 evens. You see kind of that refreshing, that kind of battle back and forth. Buyers push through and make the 46 even bid, hold it. Buyers step up again, and they clear the offer with ease. You have no issue there. And then we see sellers start to like in that 46.50 bid. Price ticks higher. Buyers are trying to hold the bid at the 46.75 level. Refreshing occurs at the 46.75. And sellers are interested, and buyers aren't interested at the 47 even anymore. So that's the first layer right there. So that's the first price point where I see a change of interest, right? Change of direction of interest. So after seeing that, that's my stop point. Now I'm looking for 2 more price pairs, 3 layers to really make the premise good. But here I see the bid break quite fast with quite easily. And I immediately saw that and I got short, right? So I got short at 46 even after seeing this clear, just kind of fast break. I'll play it in real time. It's fast break, bid, get short, right? So that's the context of it. So that's the context. It was bouncing off its current low. 675 bid broke, and price began to break the 50 bid and the 25 in one motion. Right. Took him a little second to break the 25 bid, but still, it was pretty quick. The Nasdaq futures, I wrote here they were coming off its lows and starting to get near its opening price. Once the lack of interest on the ES came in at the 7 offer, NQ fell 3 points, and then the ES did that drop where it broke the 50 and 25 bid with ease. Dropped another 3 points. But during the trade, NQ was actually was pushing higher. You see it at 59 again, bounced down to the 54s, and then bounced back up, and kind of ranging in between those prices. The E-mini Dow again was following ES much more closely today. It was also trading off its lows at the time, was pushing higher, and then as ES started to show the lack of interest at the 7 offer, YM would begin to slow down. So we'll see that happen here. So you can see it kind of trade up, go from 215 to 220 to 223, and then you start seeing the lack of interest, having a hard time really get past that 224, 225, and then tanks as the bids break in the ES. But during the trade, it stalled just like NQ, right? So you're at 218, 217, 215, 216, 217, 216 again, 222, you're back at the 240, and it broke the 245, right? So that's what NQ and the E-mini Dow was doing. The premise of this trade, it wasn't a good premise because it was a 1-layer premise, right? So I only have one price pair I'm leaning on, the 46.75 bid and the 47 even offer. So the only thing I'm leaning on, is a lack of interest at one price pair. So had I realized that I'm leaning on just one premise, one layer during the actual trade, my entry would be 46.50, not 46 even, because this is the last layer. My entry is at the last layer, and this should have been my entry, 46.50, not 46 even. Again, for me, a one layer premise is not good enough for me to willing to bet my capital and spend my time on it. I'm not betting on low probability, a crazy risk reward. I have it's a what, two, it would be a, if my stop would be a 47.25, and that's a 3 tick stop for if I'm playing the break. So I think I wrote that down. It was like a 7. Yeah, stop was 5 ticks away on the actual trade, and 17 ticks away from the low of where I'd be making my first peel. That abnormal risk reward comes with a super low probability. No one's gonna. It doesn't make sense for you to have a really great risk reward and a high probability, because someone's gonna take the other side of the trade. Right. So one thing's gotta budge. You either have a high probability and a not so great risk reward, or a not so great probability but a great risk reward. That's just the way I think of it. Nothing's a guarantee, especially here. Back to the actual trade though. So yeah, I entered quickly right after the 6 handles. The 6 handle bids broke. So everything under the 6 handle, the 75, once the 75 broke, the 50 broke, 25 broke, and we stopped at the 6 even bid. Again, the reasoning for this trade, it was a chase. It was definitely a chase, trying not to miss out on that. I would say it's more of a FOMO, but it's a chase. Just not me trying not to miss that big move after seeing that quick movement through the bids. I wanted to get in on that, quick movement, and didn't want to miss another push lower. As I was watching the whole morning, seeing it push lower, and I didn't pull the trigger on the missed trade and didn't get in at any price to capture that opportunity of the missed trade. Of course, movement of the market is just movement. It's when I see my plan and I see a premise, that's the missed opportunity, not just it moving. Anyway, going on a tangent. Another thing I noticed, it was in a value area. You can see here, 47 even was the top of that value area, and then 46 even was the bottom of the value area. The price of control of the day currently at 46.50. So that's something I didn't take into account there. Putting a stop here, sure, and it just doesn't really make much sense if I entered all the way at the bottom as a sell, anticipating a break low when we're not seeing any price action confirm that. So just one thing I wanted to make note of. Also, there's one other thing I wanted to say, but I can't exactly remember. Yeah, okay. Well, I can't remember it, so if I remember it, I'll say it. But I went over the risk reward on the first peel. Did I get stopped out? I didn't get stopped out, and this is where I believe the strength of the trade came from. I'll discuss in a second, but after getting into this trade, I'll step back a little. During this week, I had a hard time with trade management and listening to price action for it to show me like, hey, sellers aren't willing to trade lower. In this example, sellers aren't willing to hit the bids. They're not wanting to buy lower, and the change of interest and direction is starting to change, right? So I'll watch it again. You have not much selling happening at the 46 even. It comes again, then offer kind of holds. But really the point where I realize the premise is the momentum I'm looking for is gone is right here. Right as you see the bid hold, bid breaks, goes right back, and then boom. Immediately buyers find interest in that price level now. And that's when I realized I'm done with the trade. Right, so you can see here later on, it kind stayed in there and swayed in there and eventually hit my stop, right? So it was definitely a good read on price action. Seeing the refreshing at the bids, seeing the lack of interest at the 45.75 level, the refreshing occurring at the 46 even and the 46.25 especially, the lack of willing to hold the offer, and then the change of interest at the 46.50 offer from buyers. So that is the stop, or the exit. I went over the entry. Okay, so was this trade following my plan? No, again, this trade was not following my plan. It was a one-layer premise. With a one-layer premise, the entry should have been at 650, not 6 even. This would give me a 3-tick stop instead of a 5-tick stop, as I said. Still, the 3-tick stop isn't great, as there isn't much strength to the premise, and that's where the entry should have been, and not 6. It was a chase trade, definitely, FOMO, chasing the open minute price discovery, big move downwards. That's what I was looking at the whole morning, and that's what I wanted to get in. I was stalking any retracement up from the low to get in when I saw anything that resembled a lack of interest to the upside at this point. I was willing to make the trade, but I was too tunnel visioned here, obviously, as the price was in a clear range, and I was selling at the bottom of it before it even showed weakness, right? So that's exactly why I cut myself off right after this trade. It was hard, but I stuck to my rules, and that's what I'm practicing, sticking to my rules. The strength in this trade was me getting out early, listening to that price action. That's something I've had a hard time throughout the week with the trade management, especially yesterday. I had a bigger loser than I could have because of my lack of trade management. But listening to the price action, I realized it was a bad trade right after the trade. I felt it wasn't good with how far my entry to stop was immediately, and the lack of a strong premise after this is hindsight. With the lack of a strong premise at the time, I thought it was strong, and I had what I thought good conviction in the trade when obviously it wasn't. Looking back at it, but I wasn't processing the information from the market's perspective before the trade. I was putting my own color on it. Or actually, let me rephrase that. This week, during trades and my trade management, I wasn't looking at the price action during the trade from the market's perspective. I was coloring it to what I want it to be. That was this past week, or so Monday through Wednesday. But today, I definitely was able to read what the market was telling me and just read the interest. What price is interesting buyers? What price is interesting sellers? And that today I accomplished that. So that is something I'm proud of today, and that was the strength in the trade for me. The mistakes in this trade, obviously the FOMO, the chasing, even as soon as I saw the slightest bit of interest change, I took it, coupled with a quick motion breaking of the bids. I got the FOMO and entered. Right. I actually wrote this in the wrong spot. Sorry, I'm using my trade notes just in case if I forget anything. So I record this later during the day rather than right after I do my trade notes. But another strength in this trade was actually the trade. Was actually after the trade. So the implementing of my improvement strategy one, where I stopped trading for the day. If I make one bad trade, I cut myself off. And I said this in the beginning, but being able to stick to that rule even after I was thinking like, I'm gonna miss moves. It's 6:34. I still have all morning to trade. Still, there could be opportunities. Am I really gonna listen to this rule I just made up yesterday? And then I thought to myself, if I'm willing to break this rule, or if I'm willing to bend this rule, who's to say I'm not willing to bend my trade management rules, my risk management rules, and so on. So I buckled down, I listened, and I didn't trade. So that was another strength. The mistake, again, the FOMO and all that, and tomorrow how I'm going to fix that is by making sure I remember before I enter the market or before the market opens too, that there's always an opportunity. Every day I see a missed opportunity, or I see an opportunity, I see a missed opportunity that would have been a big winner, and I see that pretty much every day, where I see a clear premise with 3 layers or more, a clear stop, and good risk reward. I see that pretty much every day. A missed opportunity. I usually have a missed opportunity in every trade notes and every video review. So there's always an opportunity, right? So making sure I remind myself that during the trade, and remind myself that before the open, there's always another opportunity. I don't have to take subpar learning trades, as I call them, just another word for bad trades, but I'm saying learning trades, as it might trick my mind into, rather than, if I say bad trades, bad has a negative connotation to it. So my mind, I would think my mind would go into kind of a negative stasis. I don't know. But saying learning trade instead is a very neutral word, and it's not neutral, but it's a neutral positive word. So keeping some sort of positivity throughout the day, and not surrounding myself with negative words or doing negative self-talk, you might see an improvement. I don't know. I heard negative self-talk doesn't work, so I might as well try it. Might as well change up the wording and see what it does to my brain, see what it does to my mind. But anyway, back to the actual trade. That was a mistake. I'm gonna fix it tomorrow by doing the same thing. If the premise isn't strong, 3+ layers, why spend the capital trying to test it? Why spend the effort trying to test it on subpar, learning premises, like learning trades, subpar premises that only have 1 layer? Why waste my time? Why waste the capital? Of course, this is sim, but still, why waste it? There's no reason to. Win or lose, this trade was a loser. But those 2 were the main trades of the day that I went over in the trade notes as well. The missed trade 2 and 3, I'll go over just shortly, just quickly, simply because these missed trades, they're not as they're not like of crazy importance. It was just something I noticed after the fact, and since it's after the fact, I have that bias of knowing what's going to happen. So I don't want to, dive too into these missed trades that I saw after the fact, because I already know, 30 seconds from now, it's going lower, right? I already know. So I'm not going to overanalyze these hindsight bias trades. But I'm just going to we'll watch them real quick, and I'll go over them a little bit, and then I'll go over the next one, and then I'll call it. We'll see it here. See the clear lack interest at the 52.75, and then the change of interest. Buy started stepping up, and then they slowed down at the 53 even, right? I had the stop kind of there, but then after seeing 77 trade in the 53 evens, yeah, I thought, oh, if they still have interest at these prices, right? They still had interest. It was obviously wasn't as much as sellers, but they still had interest. You have a price battle happening at 52.50 and 52.75, right? So right here, when 52.25 is bid, not much selling. When 53 even is offer, not much buying. And then you kind of see the change in direction. Sellers push a little lower, but then buyers start to hold it. Buyers show more interest, and then they show some interest to 53 evens. Sellers hit the bids more, and the buyers no longer interested. Trades lower, and finds more buyers, entices them with the you can see the absorption at the 51.25, and then the nice buying at the 51.25. That's the second missed trade. Missed trade number 3 was pretty much right after that. So this ended at 631.28. The next trade 631.30. So this is right after that push lower. I realized this after the fact. After I was taking the notes, I realized this trade's right next to each other. It's literally the bounce from last trade. But you can see here again, we're seeing a clear lack of interest at the 52.25s, like we were seeing here. Or actually, we saw it at the 53 evens. Sorry. So at the 53 evens, there was a lack of interest, and now here we're seeing it at the 51.25s. 52.25. Sorry, seeing at the 52.25s, And then when the 52 even bid goes offer, we'll watch that here. So see, it goes offer and holds, and now you're starting to get some more selling in, and it sells the once held 5150 bid. So you'll see here 5150. Buyers are liking it. Buyers are liking it. Buyers keep pushing it back up. Sellers keep pushing it down. Buyers just keep liking that 5150 though, and sellers just decide no longer. Price comes right back. Change of interest occurs. Another one, and then price trades lower. Right. Those are the missed trades. Of course, those are. I don't want to spend too much time on them. They're hindsight bias trades, and it's something I already know the outcome for. It's not something I realized in real time. So who knows if I could have seen this in real time? Who knows if I would in real time view this as good trades with good premises? I'm pretty sure subconsciously, I try not to, but I know subconsciously I'm already discounting buying the buy strength that's occurring, the price action for the buy side. I'm discounting that, and I'm overweighting, or I'm underweighting buy side strength, and I'm overweighting sell side strength. I'm pretty, even though I don't think I am, but I'm pretty sure subconsciously or unconsciously I'm biasing towards the downside. So yeah, I didn't want to go over that too much. It's in my trade notes if you want a more detailed write-up. Of course, you can always check that out. But this is the video review for November 19th. Excited for tomorrow. As you can see, I finally got the Dow DOM up after a long time. Finally got that up. Next thing I need to do is get the DTG included newsfeed. If I can't figure that one out, I believe Jigsaw has a newsfeed with their Journalytics program I can set up. But tomorrow I'm going to set that up earlier. Tonight I'm going to fix it. If I can't fix it, of course, then I'll go with the latter option. But that's everything for today. Thank you guys for watching. I will see you guys tomorrow. Stay focused, everyone. Peace.